Hello, everyone. Manako64 here. Let me know if you can hear me well and if you can see me well as well. There's Billy. Billy is here. It is still a bit warm, hot here. I think it's going to cool down next week, which is good. It's going to go back to a normal English summer of around 20, 22 degrees Celsius, which is probably around 70, low 70s, high 60s. Nice and cool in the mornings and in the evenings. Hi, Mario. How's your brother, the plumber, still exterminating creatures that emerge from the sewers by knocking them upside down? You're talking about the Super Mario Brothers, Mario and Luigi, I guess. Yeah. Nice to see all of you here. Ballet Dance Arabia, Spock 2024, Urban Sombrero, Sam, Ricky Talk, Alan Music, Pablo Pina, Greg Austin, Natural Fool, Ant H, Music Lover Forever, BP is here. There's some other ones I forgot. Marek Kalenda, Silver Task is here. Olivier Leroy says it's 32 degrees in Paris. Yeah, it's a little cooler here, but still probably around 30 today during the day. There's Billy. He's getting up. He's going to turn around, I think. There you go. He's okay. No says mash the like buttons and share. You are coming 5 by 5. Mario and Billy. Thank you. Urban Elias Jones, 36 in the Midwest. Centigrade. Chris Jones from Cheshire. Stephen Fleming, BP. Dilwyn Roberts. All the usual suspects are here. Have you read Ray Dalio's book? No, I haven't. I mean, a lot of the things I listen to Ray Dalio talking about, I've been talking about for years. So I'm not sure I need to read his book. I'll look into it though. And I'm not being big-headed. I know he's worth a lot more than I am monetarily, but don't see much difference in view right now. Pace Arrow is here. Jillian B from Perthshire or Perthshire. Brett Workman. Hi, Andrew Watson. So the title of the live stream today is The Day the President Sold the Government to Wall Street. And we're going to wait until the top of the hour, of course, to talk about it. And you'll probably be surprised what president it is that I'm talking about. It's not the current president. I'll just give you that clue. I have read The Fourth Turning. I lent the book out to someone. I read it about 20 years ago, and I lent it to someone. And as usual, the person didn't give it back to me. It was recommended to me by one of my clients who was actually in New York. Nice guy I used to talk to. He actually worked for Citibank in New York. Shannon Wright says, good morning, Mario. Whole Bitcoiner says, Claudio Grass interview, please, Mario. I'll look into it. I mean, these things about interview, I do interview people, but it's not the major purpose of my channel. And I go with who, I feel comfortable with. And I have listened to that guy before once, but I'll keep it in mind. Maria says, hi, Mario. Elias Jones says, Bush Jr. Brojo says, Woodrow Wilson, 1913. No comment there, but I'm not going to say anything. Nab says Hoover. Harold Roy says Roosevelt. No. You guys are going to be surprised. Anyway, Bro Joe, thank you for your super chat. No, it's not Woodrow Wilson, actually. Not Woodrow Wilson. And I guess that's why you guys, I'm not trying to brag, like to watch my channel, because I got some interesting information. It's a little bit alternative. And I have said in the past that Woodrow Wilson signed the Federal Reserve Act, which brought the Federal Reserve into law, into existence, the central bank. But I think we need to go back a little more. So I've given you a big hint there. We got 5 minutes. When will Rafi be back? Well, I have Rafi on about once a month on the live stream. So maybe next week or the week after. Tayeb Hussein, paper currencies, why they're introduced? Well, because for convenience, I would say. It's easier to carry a piece of paper promising to pay $100 than it is to carry five $20 gold pieces. So that's why it was done in the first place. It's easier to carry a note saying I promise to pay you £100 than carrying around 100 sovereigns. So it facilitates the flow of money, and also it's for safety. You have to go back also maybe to the Middle Ages when you had the Crusades. The Crusaders traveled throughout Europe into the Middle East, and it was it wasn't safe traveling with a lot of money, and that's where banking started, really, kind of international banking. So you had banks open, they had correspondence in different places throughout the Mediterranean, and they used to write a promise. And you were a Knights Templar, and you're traveling through Asia Minor into the Middle East, and you have to stop provisions. You go to the local bank that has a correspondent, let's say, relationship with a bank in Paris, and you show them that note, and they'll give you the money. And that's why paper money started, I would say. But it was supposed to be a promissory note backed by real things. Nowadays, that's gone out the window, of course. Richard Martin says, aloha, Mario. Aloha, Richard. Abraham Lincoln. No, it wasn't Abe. Honest Abe, right? Gold is money, tall Paul. Orlando, thank you for your Swiss francs. Put a leather strap plus pin buckle on your Rolex you will like. I prefer the metal. I don't like leather straps too much because in the summer it gets too sweaty. We got 3 minutes, and you will find out who that president is. And then we're going to go over why JP Morgan doesn't get punished. They get fined, but they never go out of business for all their wrongdoings, right? Shannon Wright, thank you for your super chat. This is for Billy. He wants to get down. He's getting hot. Come on, Billy. Good boy. Come here. He's going to come and say hello to everyone. He's going to get groomed on Tuesday, so he's going to be a lot more comfortable. There he is, 14 years old. Come on, boy. Get down. There you go. P.S. I keep hearing about some guy who bought a city block in Berlin during the hyperinflation with 6 ounces of gold. Do you know where that came from? I heard the story that it was a young guy who got a $20 gold piece from American tourists, and he was able to buy a hotel. There's different stories. I'm sure there were quite a few. It wasn't FDR. BP. Okay, it's almost the top of the hour. So BP got it right. It was Grover Cleveland when he asked for a bailout from JP Morgan. That's right. And that's what we're going to look into today. And that was in 1895. And Grover Cleveland was a Democrat. And this is not to say that the bankers don't run the Republicans either, but it was a Democrat who sold the nation's soul to Wall Street, so to speak. Over here, Mario, don't like the leather straps. Leather whips, no, I don't like that either. Not into that. Oh, it wasn't Andrew Jackson. Andrew Jackson did the opposite. He destroyed, well, he didn't renew the charter for the Second Bank of the United States. So yeah, so it was Grover Cleveland in 1895. We're going to go over a few books that I have here. I've got the House of Morgan, and I've also got something about the Medici, which you might think, what's that got to do with, you know, a president selling the government to the bankers? Well, you see. And I just dropped my drink here. Just have to dry it. Moving the books. Good thing I have a handkerchief. I'll have to put it in the wash. Ryan Morosi, thank you for your super chat. Looks like we have some kind of bot here. Going to remove it. It's been a while since we've had bots. Hide user from the channel. So, yeah, why is this? Yeah, this is why I wanted to entitle this live stream, "Why Does JP Morgan Get Away with All Its Wrongdoings?" You know, recently we had to have the story that a lot of their traders, former precious metals traders or current precious metals traders, are being tried for manipulating the precious metals market. And we know that JP Morgan has been fined, I would say, over $50 billion in the 21st century. And how do I know that? Well, thanks to the Solari report I've got from Catherine Austin Fitz. She's got all the fines JP Morgan's paid up until 2019. And there are pages and pages here of their fines. Let's see how many pages. There's about 20, and I counted some time ago. I added it up, and it's up until 2019, it was $43.77 billion. So we must be over $50 billion now in fines, 50 billion. And they keep getting fined. And that's the reason why, because the JP Morgan, they basically engineered a bailout for the US Treasury back in 1895. So we're going to go through an article here that I found on the internet about that, and then I'm going to reference the books. So here we go. And, you know, the US Treasury, they owe JP Morgan. You know, the deep state owes JP Morgan. So during panic of 1893, JP Morgan used 60 million in bonds to bail out the United States government. So it was in 1895 actually that they bailed them out. The panic started in 93. So let's just quickly go through it. And at that time, the US had gone into a gold standard with Europe in 1879. So they had to keep the amount of gold. They had to JP Morgan was like the link between the United States and Europe. So he also had a lot to lose if the US government went defaulted. So here it says, in the early months of 1895, things were getting desperate for US President Grover Cleveland. So there we go. It was Cleveland. The country's economy was collapsing because of falling prices and rising unemployment that began with the Panic of 1893. 18 months later, millions were unemployed and the Treasury's reserves were dropping too. Normally, the Treasury held gold reserves above the statutory floor of 100 million. That doesn't sound a lot, but it was a lot back then. But by January 24, 1895, yeah, don't forget, 100 million, each ounce was $20.67. By January 24th, 1895, the Treasury has only 68 million. Scarcely a week later, it was down to 45 million. Nervous investors started to demand gold for their dollars. A run on the Treasury was inevitable, and the plan to subsidize the gold reserves with silver only made creditors more anxious. President Cleveland tried to avert the disaster with Treasury Secretary John Carlisle. The president had proposed a plan to sell government bonds to the public to raise 60 million. So, that didn't work out. And eventually they had to resort to JP Morgan. Here you go. This is, he eventually succumbed. JP Morgan traveled to Washington to meet with the president, with the attorney general and the secretary of the Treasury. And it says here, the president asked if everything was legal, and Morgan replied, it was by virtue of Civil War statutes, 4,000 and something, only checked, and it was all quite legal, but politically dangerous for the president. The public was not fond of Wall Street personalities, and Morgan was the biggest personality of them all. Morgan assured the president that gold would not be shipped abroad until the goal of the plan was reached. Trying to save some dignity from the situation, President Cleveland said they didn't need, said, I don't need 100 million and 60 would be fine. So there you go. That's how they saved it. There were repercussions, of course, as you see here in the title of my live stream. The political price Cleveland anticipated had to be paid. Many on the left contended the president sold the government to Wall Street. When Morgan refused to reveal his profits on the deal, the party grew more enraged. So there you go. And it led also to William Jennings Bryan, a famous speech of being crucified on a cross of gold. So there you go. So let's see if you guys have some questions. And I'll read some of your comments as well. Take what Rafi says with a pinch of salt, people. Don't know what's going on. Mario, are there any books you recommend? Any other books I recommend? Yeah, I mean, I have videos I've made about books that I recommend. You can go onto my YouTube channel and search under videos and type books. I've done book lists and everything. So yeah, do that. Lisa Porter, a billionaire, just placed an order for $1 billion worth of silver eagles. No, I don't think she did. I think you should go to Wall Street Silver. They've done a good video about this with Andy Schechtman. It's different. She hasn't placed the order yet. She's bought about 50 million worth of silver and gold, and she said she's going to have a lot more to come, probably $1 billion. Greg Austin says JP Morgan didn't really have that much money. Yeah, I guess when he died, you know, his will didn't have much in it, but it could all have been in trust, offshore trusts as well. There is speculation that a lot of the money that flowed through the bank was actually coming from the Rothschilds in London. And this is where I'm going to come to this book in a minute, The House of Morgan. There's a question here, though. John Van Meter says your Rolex was a better investment than gold. Well, let's see. I bought it in 2003 for 2,000 pounds. I could probably get 7,000 pounds for it now. So 3.5 times. Back then, the sovereign was about 50 pounds. And now the sovereign is about 350. So actually, it's performed just like the sovereign, I would say, my Rolex. But the thing with the sovereign is a lot more liquid. I could sell this watch, but it would take a bit of time. With a sovereign, I could sell it anytime and get the cash, you know, straight in the bank. With a watch, it would take longer. So yeah, it's like kept up. Here in the UK, it's pretty much kept up, the Rolex and the gold price. Helen of Troy ounce. I don't know about that question, if that was the day the US became a corporation. I would say it was earlier. It was probably after the Civil War. I think the date is 1870, something like that. Mark Volker, thank you for your super chat. I think the story of the 200,000 tons of gold discovered in Uganda is a globalist propaganda. I agree with you, Mark. It's utter BS, I would say. I think it would be easier to get an ounce of gold from an asteroid than to get all that gold from Uganda. So we got more bots here. That's annoying. Maybe some of you guys, the moderators, could help out. Okay, we've done it. Yeah, 1871. So the House of Morgan, I really recommend. It's a thick book. I bought this even before I got involved in gold, and even before I moved to London. I bought this in Geneva, Switzerland. My office in Geneva was above an English language bookstore and video store. Back in the day, you rented videos, late 80s, early 90s. And I bought this in Switzerland and I read this book. And what you get from this book is that the JP Morgan Bank did not start in New York. It started in London. And it originated from the George Peabody, who was an American banker in London, in the city, back around the 1830s till 1860s. And nowadays, Peabody is still a name in London. He left all his fortune to the Peabody Trust, and they help a lot with, you know, poorer people, with housing and everything. So he did a lot of good, Peabody, but he left his firm, his banking firm, to Junius Morgan, who was JP Morgan's father. And Junius Morgan moved to London. And speculation is that they were successful because the Rothschilds, because of, you know, they controlled the city by then, the Rothschilds. They were the people who lent money to nations and kings and emperors. And but in the US, there's still a lot of, not only in the US, but Europe, there's a lot of discrimination. So the rumor is that JP Morgan was basically a link, an agent of the Rothschilds in the United States. Eventually, when JP Morgan, the son of Junius Morgan, came to London as well, but then he opened an office in New York. And so one can wonder if a lot of the gold that the JP Morgan helped raise to save the US Treasury was Rothschild gold as well, right? So they talk about the panic here, and I'm going to read from this book. It's only about a page and a half, so it shouldn't take too long. So they look at it in more in terms of trying to save the gold standard, which is really interesting because they talk about silver as well. So hopefully you enjoy this. In 1895, and they also talk of why eventually you had this panic of 1893, the reason behind it. In 1895, Pierpont Morgan engineered his most dazzling feat. He saved the gold standard and briefly managed to control the flow of gold into and out of the US. The concept behind the gold standard was simple. Ever since January 1879, the government had pledged to redeem dollars for gold, thus ensuring the value of the currency. To make things more than an empty boast, and reassure worried investors, Washington had a policy of keeping on hand at least $100 million in gold coins and bullion. In the early 1890s, huge amounts of gold began to flow from New York to Europe. In the circuitous way of world finance, the trouble started in Argentina. In the 1880s, the city of London was swept by a craze for Argentinian securities, which attracted almost half of British money invested abroad. The principal conduit was Baring Brothers, Baring's Bank that Nick Leeson finally did away with in 1995, right? And my wife actually worked for Barings in the mid 80s to early 90s, Mrs. Monaco 64. So Baring Brothers. Let's continue. Then the Argentinian wheat crop failed and was followed by a coup in Buenos Aires. The prospect of default hurt the Morgan Bank in London, but nearly collapsed the August Barings, which lost heavily on its Argentinian bonds. To save Barings from bankruptcy in 1890, the Bank of England organized a rescue fund to which J.S. Morgan and Company, that's Junius Morgan, and that's how it was called, J.P. Morgan, before J.S. Morgan and Company, and other rivals contributed. The old Barings partnership was liquidated. The reorganized firm would never again regain its former power, and a major Morgan rival was weakened. Before long, Barings shared supremacy in Argentina with Morgan's. Meanwhile, with a stigma attached to foreign holdings, British investors retrenched and drained gold from America. So there you go. This exodus of metal was greatly accelerated by the Panic of 1893, with its bank failures and railroad bankruptcies. Let's get rid of more of these bots. So I'll continue. Adding to the European jitters were American attempts to temper with the US currency. Can we give you a super chat to read the whole book to us? Well, the problem is this book is, I'd be here for, I don't know, for a few days. I don't think people would want to listen to me for a few days. But anyway, I'll stop here, actually. So you see that it started out in Argentina, really, with British investors. And at the time, I guess British investors were like American investors nowadays. And thank you, by the way, PS. They were like American investors. They had a lot of the capital, and they plowed money into Argentinian securities, a little bit of like a dot-com bubble, right, of the day. And eventually America started trying to also mint silver. There was the great crime of 1873, but they're trying to help things out with silver. And Europeans didn't like silver. The power elite in Europe wanted gold. They didn't like silver because America had a lot of silver, and I think they saw it as a threat. And this is quite interesting because yesterday I had looked at that article that I read to you a little bit about the Panic of 1893, but they didn't put the gold and silver story into context. But this book did, and I think it goes to show that the bankers establishment in New York and in London, they don't like silver, and they didn't like silver back then. So they put a stop to that. The European bankers thought they were going to be paid in silver instead of gold, and they didn't like that because silver is the money of the people, right? And it's even interesting. I'll revert back to the book here. It says to the Morgan book, this discontent made bankers and the favorite bogeyman in rural political demonology. So venomous was the mood that several Western states outlawed bankers, and Texas banned them altogether until 1904. So I didn't know that Texas had banned bankers up until 1904. So there you go. It's quite hot today. I've got the window open, but Mario, have you heard of JM? Have you heard of Bill Holter? Yeah, I have heard of Bill Holter. I've been listening to Bill Holter for years, and he joined with Jim Sinclair a few years ago. Yeah, that story, 50 million in silver and gold as well. I recommend Wall Street Silver. They did a really good interview about that with Andy Schechtman. I think it was yesterday or earlier today. I don't think Bill Holter's spoofing, because Andy Schechtman got the order, and the billionaire lady said she wants the world to know that she's doing this. Deal with Roberts. That's a shame, Mario. Looking forward to do 2 days off work. That's funny. Yeah. So maybe what I could do is do an audio book and sell it. Sell it online. I'll have to read the book. You hear my voice, and maybe an audio visual book. I could read a book, record it like a video, and put it online. I'm not sure how well that would do. BP, do you think the world would have been better if Andrew Carnegie decided to bankrupt JP Morgan instead of selling his steel company? JP Morgan compete. It's a difficult question to answer. I don't know. Not sure. Do you think do you have air conditioning in your home, or is it not common in the UK? It's common in like when I worked in the city, in the offices, we had air conditioning because the offices, the windows didn't really open. They're in modern buildings, but no, we don't really need air conditioning here, except for maybe a few days of the year. The last couple of weeks has been unusual. So, and next week it's going to be cool again. So no, it's not really. Some people do have air conditioners, but it's not really worth having it. It's mostly cold and cool. I mean, in this country, we had the heating on this year sometimes up until April, middle of April. So there you go. We need more heating than air conditioning. What's been your favorite book? Avola sunglasses. Oh, it's difficult to say. I mean, there's so many of them. Um, I mean, fiction. It's fiction books is a series of books by an author called C.J. Sansom. Uh, yeah, and it's a historic. It's like his history and also suspense, and it uses like true historical like people like Henry VIII. It's during Tudor times, and there's a fictitious lawyer called Shardlake, and he's got a series of 7 books, and they're great historical novels. But that's one of my favorites. But I mean, I've got so many. This is a very good book. I read it ages ago. Uh, Difficult to say, really. The Mandibles is a very good book, recommended by one of the viewers, I think about 4 years ago. I recommend that book, The Mandibles. That's fiction as well. Atlas Shrugged. Yeah, Atlas Shrugged. I read that too, and it really changed the way I think. I didn't agree with everything in that book, but it opened my eyes to what big government and socialism can do to a society. Mario buying silver. Yeah, I buy silver almost every month when I have some extra fiat. I think I'll be buying some this coming week now because my balances are going to go up a little bit. Cobalt Sear says Atlas Shrugged wasn't fiction. Well, it was fiction. Atlas Shrugged. It might. I guess what you mean, what they're talking about then is becoming true. That's right. It's a little bit like 1984. I read 1984 in the 80s, a long time ago. Don't remember it. I also like James Clavell. He wrote a lot about like King Rat was a really good book he wrote. Yeah, what government has done to our money. That's a good economics book as well. That one by Murray Rothbard. Oh yeah, Ballet Dance Arabia. The Vatican's role in the financial system. I think it's quite a big one, and yeah, especially in Europe. And I'm reading well, I've been reading it for the last couple of years, but I haven't finished it. It's called God's Banker by Gerald Rosner about the Vatican Bank. Yeah, and I've done a video as well um, about the fact that the Vatican Bank helped the New York Fed manipulate the gold price in the 70s. And I have a letter from the Vatican to Paul Volcker, who at the time was the president of the Federal Reserve Bank of New York, thanking him, thanking the guy from the Vatican for allowing the New York Fed to sell the Vatican Bank. But I think what he meant was to lease the bank, the gold. So that's the other book I told you about, Meditary Money by Tim Parks. This is another good one. And I wasn't going to reference this book when I was preparing for the live stream, because a lot of times, I get the idea, I write it down, or I send myself an email saying, talk about this. And I was going to use the Morgan book and that article that I referenced earlier. And when I read the Morgan book and looked at the connection with silver as well, and the fact that, the Western states, Texas, they preferred silver. The farmers like silver. And the establishment in Europe and New York, the Eastern establishment, they wanted gold. And that doesn't mean to say I'm against gold. I think gold's still good, but it just goes to prove that silver is the really the money for the general public. So yeah, the Medici money, they talk about this. So I'm gonna go to page 32, and this is what they say, what the author says. Not so in 15th century Florence. Your silver coin, the picciolo, could not be added up to make a golden florin. They were separate currencies. The logic of this was that since the two coins were actually made of precious metals, indeed their worth depended on the intrinsic value of each mineral. The relationship between them could no more be fixed than the relationship between apples and oranges. Piccioli could only be changed into florins by the bank at the going rate for changing silver into gold. Thus, the reasoning. The reality was that into the very element that potentially frees us from class, the element that allows the hateful parvenu to pile up wealth and act as if his peasant family were as noble as mine, a radical divide was established. The picciolo was the currency of the poor, the salary of the worker, the price of a piece of bread, luxury goods, wholesaling, international trade. These were the exclusive realm of the golden florin. By law, it was a situation not unlike that in communist bloc some years ago, while the rich and powerful used the dollar and the masses the zloty or ruble. Men who dealt in Piccioli had a long way to go. Across the banker's green table, you could make the move from one world to another, from silver to gold, modesty to riches, at the price of a small commission. Needless to say, the poor man's money tended to be worth less and less. In 1250, and this is not because it wasn't good. You see why, and it will show you that very little has changed. In 1252, when the florin was first minted, that was the golden florin, it could be bought with a lira of Piccioli, which was 20 Piccioli. Around 1500, so 250 years later, you needed 7 lira of Piccioli, or 140. This was partly because the merchant who belonged to the Arte di Calimala, the Merchants Guild, the silk manufacturer who belonged to the Arte di Porsan Maria, the Clothmakers Guild, earned in florins but paid salaries in Piccioli. When profits were down, they encouraged the mint, which was controlled by the government, which in turn was formed mainly of men from these powerful guilds, to reduce the silver content in the Piccioli. So there you go. They've been manipulating silver ever since the Middle Ages in Italy or in Florence. And they're doing the same thing now through the paper manipulation. And with that, I wanted to also touch upon some information that has been coming out in the last few days, mainly because the Commitment of Traders report came out. I think it comes out Friday afternoon, and it's for the period from the week before until the Tuesday. So this is not really updated until Friday last week, but until Tuesday. So let me share this screen here. This is from King World News. I think Rafi Faber made a good video about it, which I recommend people should watch this afternoon. So bullion banks, massive short covering in gold and silver markets. And I have to say, this Commitment of Traders report, I don't follow it too much, mainly because I don't trade and I hold gold and silver for the long term. And I know it does affect the price, but I think the most important thing is to dollar cost average, to keep getting out of paper, but be as it may. So let's go through this article. It says, for a second week in a row, below is one of the more interesting gold and silver reports King World News has released. It gives KWN readers around the world a look at what the the big money is watching in gold and silver markets. So let's below, you can see the latest report showing bullion banks and commercial traders have reduced their net short positions in the gold market. So this is a 10-year chart, commercials covering gold short positions. So yeah, you can see that every time they're really short, like here or here, the market tops and comes down. Like here, the market kept going up a bit, but eventually, they've been able to keep it here by being relatively short. But now they're short covering, and this was until Tuesday last week. So this might be up here now. Who knows? So usually when we get to around a flat position or even long, sometimes they go long. The last time they were long was here, and look what happened. Once they were long, it started going up, and then this goes down because they're taking profits and going short because they want to control the ascent of the price. So I guess we could still have more of a move down, who knows, before we start going up, but it looks like we're getting very close. This is more of a multi-decade look at it. Of course, it's been a lot higher before, but since the beginning of the century, bullion banks have been mostly short to flat. And I guess we're pretty close to it. I mean, over here, I mean, we're almost, I think that was end of 2015 when gold bottomed just above 1,050 or 1,045, actually. They were flat. So yeah, there is a little bit of more room on the upside. And I watched Rafi's video. He said it's possible that we could still see the paper gold puke, as he says, and we could see it go further down. But we're very close to where the commercials, which are the bullion banks, are going to start going long. And silver is even more extreme, as you can see here. Silver report extremely bullish. So yeah, I mean, looking at it for the last 10 years, we're almost at a record, position here in terms of not being short. And then multi-decade as well. So yeah, don't want to sound too optimistic, but it's looking better. The miners, of course, are not doing too well, but that's more speculative. I've always told people that investing in miners is more speculative. It's like buying a call option in the gold futures. So you have to be prepared for the sharp moves up and down. I see Echo is here. Hi, Echo. Nice to see you. Mario, you must take into consideration the BRICS development. Michael Kennedy. Michael, I saw that someone made a video yesterday about this as if it had just come out. Oh, the BRICS are going to start a new reserve currency. And I think it was, what's his name? I forgot, Ninja Economist. And he referenced an article by Quoth Raven, I think, and that was published on Zero Hedge. But if you read the article from Quoth Raven, he's talking about things that happened over a month ago. And I spoke about this. Putin leads BRICS nations into a gold standard. So this was a video I made on June 23rd this year, and it's got over 21,000 views, maybe not as much as Economic Ninja. So I've touched upon it. The thing is, it's history. It's not something that's happening right now. It's happened already about a month ago. And I don't want to be critical of other people in the alternative, but Yeah, they need to do their research a little better because this thing is not just come out. Putin spoke about this on the 17th of June during the St. Petersburg International Economic uh, Forum in St. Petersburg. So there you go. No, it's happening. You know, the BRICS and the BRICS Plus, which is all the other non-NATO Western countries which are joining the BRICS, they're going to move to another kind of monetary system. We don't know how it's going to look like yet, but I'm sure gold is going to be a very important part of that. Gold is already being purchased in big amounts by China, Russia, even Brazil, India. Poland is buying gold. Even, excuse me, even Ireland has been buying gold. So yeah, it's not surprising. They're preparing for, you know, the unraveling of the dollar system. The dollar is still going to be around. It's just going to be buying a lot less of things. Spanish on what percentage of your cash should be in precious metals do you think versus cash in the bank? I only have enough cash in the bank to cover my expenses and also things like tax bills. But and after that, it's up to you to decide. I mean, having gold and silver is like it's the old way of saving, really. And people used to keep their savings in the bank, i.e., gold and silver. But you can't trust the banks anymore, and they'll definitely not keep gold and silver for you in the bank anymore. So you have to decide for yourself. You could also pay off debt instead of just having gold and silver. I would recommend paying off as much debt off as possible as well. Helen of Troy, I don't think the governments will nationalize the mines. No, I don't think so. I don't think they ever did that. The US, they never nationalized the mines. Of course, they did confiscate the gold in 33, but I don't think they'll do that again, personally, because it's not a big percentage of people that have gold. Gold in 1933 was part of the banking system. Now it's not as much. Steve Woitas, do gold and silver require the Fed to turn dovish to increase in price again? Well, the way the Fed isn't really dovish, I would say, but not necessarily, because you know in the 70s when the Fed was raising rates, like from 1977 to 1980, I think the Fed funds rate went from around 5% to 20%, and gold went from $200 to $850. So not necessarily, really. And if you look at the Fed's balance sheet, they're supposed to have decreased the balance sheet by 90 billion since the beginning of June, and they've only decreased it by about 15 billion. So they're not as hawkish as they're saying. And what I think is happening in gold and silver is more, yeah, it's just a correction. Yes, it has been suppressed, but the same thing happened from 1975 to 77. Gold dropped from 200 to 100 and only regained that 200 level towards the end of 77. So it took 2.5 years. Pace Arrow, thank you for your super chat. Bill Clinton, 1990s. I guess you're trying to give me, selling. I guess you weren't here in the beginning of the live stream. No, it was Grover Cleveland in 1893 when he allowed JP Morgan to bail out the US Treasury. The US Treasury was running out of gold and they were under gold standard. So it was earlier than Clinton. Clinton was very pro Wall Street as well. He hired Robert Rubin, who was a former was the CEO of Goldman Sachs, as his Secretary of the Treasury. And yeah, he he listened to the bankers, and Obama as well. Bush hired Hank Paulson. Obama apparently had an executive from Citibank pick his first cabinet. So there you go. And Obama's attorney general, I forgot his name, African American guy. He worked for a major Wall Street uh, law firm whose major clients were the Wall Street banks. I forgot his name now. It'll come to me. So all presidents are controlled by Wall Street, even though Grover Cleveland was a Democrat. Judith Carnahan about Nenner and Armstrong. Well, they've got good track records and cycles. They could be right. Uh, in the stock market, I think Nenner has been right. Nenner hasn't been so good on the gold call. I think in March he said gold was going to bottom in June, and here we are at the end of July, and it hasn't really bottomed yet. So I would say, Charles Nenner and Armstrong, I respect them, but they're not like if they were really good and they knew what if they were perfect in calling things, they wouldn't be out there selling their products to people. And that's all I would say. But they could be right. But there are some other people actually who think the stock market could rebound if the Fed, stops raising rates. Of course, this week is pretty important week. The Fed FOMC meeting, I think is it 26, 27, 27. I think Wednesday they will announce their rate hike. I think it's going to be 75 basis points. 27th, yeah. And then on the 28th, we're going to get GDP data, which might be negative. So it's going to be an important week. The Steward thoughts on real estate dropping 20% of current prices or lower. Well, I guess, are you in, if, I don't know where you are, but in the UK, real estate has stayed quite high in nominal terms. In dollar terms, it's actually gone down because our currency is going down. In the US, we could see real estate stay elevated in terms of nominal values, but what we can see is the currency continue to lose value. And by that, I don't mean versus the euro. It's losing value versus consumer goods, especially if the Fed pivots. You could see real estate stay strong, but, the currency won't be worth much. So, yeah, you could have houses go from an average, I don't know what they are in the US, $400,000. I don't know what the average house price is in the US, but it could go up by 20%. But if the dollar drops by 30%, is a real price really going up? For it to crash like during the Great Depression, they'd have to, the politicians and the bankers, central bankers, the Fed, would have to pull the plug completely. And if they did that, there would be a major, I think there would be riots and revolution in the streets because people would be, starving, basically. Echo, if there's a peace development in Ukraine, I think stocks will fly. Okay. That could be so, yeah. What will be the first thing you do if gold goes to 100,000? We are due gold to $100,000. I mean, well, that would mean that the whole everything's collapsed really, And you'd have to look at gold in terms of real assets, not in terms of paper dollars. You know, I wouldn't want to exchange it for dollars, that's for sure, or for pounds. I'd want to exchange it for maybe some land or some a second home or something like that, something of real value, tangible value. And you'll have to keep track of the ratio between gold and all these other assets. But yeah, that would mean the end of the dollar system and fiat currencies. It's like, you know, in Venezuela and Zimbabwe right now. Kickjack, thank you for your super chat. Please make a standalone video about how they mess with gold and silver markets prices with examples so we can get friends and family to listen. I did actually last week. Let's have a look. Where is it? I did do a video about the manipulation. It was quite recent. Let's see. I think it's in this one here. Yeah, I called it, and I've made many of how they manipulate the price. Oh wait, it's not that one. Hold on. Oh. Yeah, it's this one here. It was actually on Friday I made this. It's this one here. Here you go. I would say this is a standalone video, and it's entitled, let me put the title there too. The COMEX and LBMA are glorified bucket shops. So the COMEX is the futures exchange, and the LBMA is the cash market in international gold market. And this video explains how, yeah, this video here explains. Let me remove that and I'll give you another link. If you show this to your family, you know, I think it will help them understand how it works. Shareable link. There you go. You know, the secret really here is that, and this has got to do with this billionaire lady who has been buying a lot of gold and silver from Miles Franklin, is buying physical, because a lot of wealthy people, especially, you know, like this lady, or even maybe not even billionaires, they go to their bank like JP Morgan or whatever, and they buy gold from them, and JP Morgan says, oh, don't worry, we'll store it for you. You know, you don't have to take delivery. It's too cumbersome. And then you find that they really don't have any gold and they're still charging you for storage. There's a story about Morgan Stanley years ago, maybe 10 years ago, maybe less or more. And they were supposed to be storing silver for clients. They were charging them for the storage. And then the clients found out that there was no silver there. They were fined millions of dollars for doing that. And they're still in business, of course. So that's the secret to ending this manipulation, is for people to keep buying physical. And yeah, they don't want you to get physical because they can't control, you know, the price as well, the paper price. Oh, you, Mike, thank you for your super chat. Do you think the price of gold, what do you think the price of gold should be? You know, there's a chart. I don't have it here right now. It's comparing the national debt with the price of gold, US national debt. And up until a few years ago, they used to track each other. For example, if the national debt was 10,000, gold was at 1,000. If the national debt was at 20,000, gold went up to like 1,900. And now the national debt is almost 31,000. So I think it should be at least 3,000. But I think, yeah, that's what it should really be. And I think silver should be, at least $50. That's for sure. LG, I do think that it could break up the euro. The EU is different, you see. Not every country in the European Union uses the euro. But I guess if the euro currency fell apart, i.e., if Italy started using the lira again, it could also lead to the breakup of the European Union. I think it would be a huge blow. But not only Italy, but I think Germany, their economy is in big trouble. They're kind of deindustrializing Germany. And Germany is the powerhouse for the European Union. If Germany collapses its economy, who knows what could happen? Drought in Texas. Yeah, there's a drought in Europe as well. When I was in Italy a couple of weeks ago, they were talking about the fact that they had a bit of a drought there. BP, I don't think a 75 rate hike would lead to a gold and silver smash. Is pretty much priced in. If anything, it could help gold and silver go higher because there's still some people who think they might raise it by 1%. So no, I don't think it would. So we got 4 minutes to go. Dan Harrington, when do you think Russia and China will take pricing power of commodities away from London and New York? Well, I think it's already happening. I've been speaking about this for years. The exchanges that the Chinese have opened, like the Shanghai Gold Exchange, Shanghai Metals Exchange, the fact that the Russian Central Bank has they opened a branch office in Shanghai as well. It's going to take time. I think the LME nickel default we had in March, the London Metals Exchange, and that's not precious metals, that's just base and industrial metals. That really hurt the reputation of the US and the UK's power in the pricing of commodities. And in the UK, in the LME, everything's priced in dollars. So yeah, I think it's accelerating. More and more people are going to resort to exchanges in other places other than London and New York. And I think, unfortunately, London and New York are going to shoot themselves in the foot because their commodities markets are not, especially the precious metals and the base metals, they're not real markets. They're just bucket shops where people bet on the price. And but the LME is actually owned by the Hong Kong Stock Exchange. So we could see the LME actually go over to China. Who knows? Kick Jack. Thank you, Marius. Sorry I missed that video. Don't worry about that, Kick Jack. Yeah, we got 2 minutes. Beth, what percentage of gold and silver would stack today? Ideally, thanks. I love your channel. That's I view gold and silver as savings. So, how many dollars would you save? That's the way you have to think about it. And And I guess I'm not an investment advisor, but there's ways of saving, right? Gold and silver or cash, I consider them cash, are really safe. They're for a rainy day. And you might want to take some of that and put it in dollars, and then take those dollars and buy companies in the stock market. You might want to buy something to help you hone your skills, improve your business, but I think it's always good to have a little bit of gold and silver for a rainy day. And that's why it doesn't make any sense to borrow to buy gold and silver, because it's like, why would you borrow to save money, right? Where's Billy, Mario? Well, he was here earlier, but he got hot on the sofa. Let me, Billy, let's say goodbye. He's on the floor. Here he is. Oh, here we go, Billy. There we go. Say goodbye to everyone, Billy. Billy's gonna get a haircut on Tuesday, so he's gonna be a bit more comfortable in the heat. Anyway, there you go, Billy. A kilo of gold bar is the size of a cell phone. That's true, The thing is, if you have only enough money to buy a kilo, I would say you shouldn't. You should buy coins. But I guess if you're a multimillionaire, a billionaire, you can buy a few gold kilo bars. Love button. How's our friend Billy handling the heat? Like every dog, he's a little bit uncomfortable, but he finds the right places to go and lie down, and he's all right. But yeah, he's fine. Okay, that's it. Thank you, everyone. Thank you for your involvement in the live stream, your questions, your super chats, and I'll talk to you tomorrow. Have a great week, and take care. Bye.